Welcome, deep divers. Today, we're putting on our detective hats, trying to figure out Bitcoin's latest moves. If you've had an eye on the crypto market lately, you know it's been, well, a pretty wild and unpredictable ride. Leaves a lot of us asking, what really just happened? So our mission today is pretty clear. We're doing a deep dive into Bitcoin and the wider crypto market. We've got a great piece from investing.com guiding us. We're not just going to read the headlines. We want to pull out the key insights, give you a really clear, sort of nuanced picture of what's actually driving these shifts. We'll look at Bitcoin's price swings, the big shadow the U.S. Federal Reserve casts over things, then zoom into a really interesting regulatory development out of Japan, and check on the altcoins too.
Exactly. But crypto markets can look chaotic, like they're off in their own world. But when you really start digging, you see these deep connections. It's fascinating how stuff that seems totally separate, like a central banker's comments here, a finance minister's statement there, actually weaves together. It all shapes how this whole digital asset space moves. We'll try and connect those dots for you today, get to the why behind the what's.
Okay, let's unpack this roller coaster then, starting with Bitcoin itself. Seen some big swings recently. Just this Monday, it took quite a dip, right? Fell below $112,000. The article mentioned it was trading about 3% lower, around $111,610 early Monday morning Eastern time. And it had even touched a 6-week low near $111,000 before that. Now, what's really striking is this happened just days after it surged, jumping above $117,000 on Friday. So that's a pretty significant turnaround in like no time at all. What do you think drove that initial jump and then the sharp drop right after?
Yeah, it's really something. What's fascinating is just how sensitive crypto, especially Bitcoin, is to signals from, traditional finance power players. That first surge you mentioned, the one pushing it over $117,000 on Friday, that was pretty much a direct reaction to what the market read as dovish remarks from Fed Chair Jerome Powell. This was at the Jackson Hole Symposium. Dovish basically means signaling a softer approach to monetary policy, maybe less aggressive on rate hikes, or even hinting at cuts. Powell talked about growing risks to the job market, and the key part was suggesting a shifting balance of risks may warrant adjusting our policy stance.
Ah, okay. So the market hears that.
Exactly. The market hears that and immediately thinks potential rate cut coming, maybe even as soon as September. And the prospect of cheaper money tends to get investors excited about riskier assets.
Like cryptocurrencies.
Absolutely. It's like fuel for assets that thrive on liquidity, which Bitcoin definitely does. So that initial jump, purely anticipation. Investors piled in, thinking crypto was looking good in a potentially looser money environment.
It's almost like the Fed whispers and crypto reacts instantly, like a really sensitive instrument. But then it pulls back so fast. That internal market stuff, the profit taking. How do those two things, the big macro signals and the immediate market psychology, play off each other, especially after such a quick run-up? This is where it gets really interesting because those gains vanished pretty quickly.
That's the classic crypto story, isn't it? The beauty and the beast. The signal from Powell was strong, no doubt, but it caused a really fast, almost vertical climb. And after a move like that, especially in a volatile market like crypto, you almost expect a pullback. That's where profit-taking kicks in. It's not just random selling. It's traders making a strategic choice. Okay, I just made a quick buck. Let me lock that in.
Makes sense, especially with crypto speed.
For sure. When things can move 5% or 10% a day, people are quick to take money off the table, reduce their risk. Can't really blame them. And it wasn't just profit-taking. Analysts also mentioned resistance levels.
Like technical ceilings in the price chart.
Exactly. Points where selling pressure tends to increase, often stopping a rally or even reversing it. Combine that with what they call a consolidation phase. Basically, the market catching its breath after a big move, finding a new stable level.
Right.
And that explains the Monday dip pretty well. It's a normal market thing, just often way more intense in crypto because of the leverage and speed. Shows that even with strong outside news, crypto still has its own internal gravity, pulling things back after big swings.
It's a fascinating dance, isn't it? A word from the Fed lights a fire, then market mechanics pour some water on it. Okay, so while Bitcoin is doing its daily tango with the Fed and profit takers, there's this bigger, longer-term story playing out globally. Let's shift gears from the market pulse to a really big signal coming out of Japan. On Monday, Japan's finance minister, Katsunobu Kato, made what sounds like a pretty major announcement. He said the government plans to work towards establishing an appropriate environment for crypto assets. Honest, that feels like more than just a soundbite, doesn't it? What's the real significance here for us?
Oh, absolutely. This isn't just a headline. It could be a real game changer. If you connect this to the bigger picture, this kind of proactive support from a major economy, It's not just about making crypto legit. It's about potentially unlocking serious institutional money.
Ah, the big players.
Right. Minister Cato didn't just say appropriate environment. He specifically mentioned that digital currencies could be part of diversified investment portfolios. This is a huge statement coming from a G7 finance minister. It signals a shift from just tolerating crypto to actively thinking about integrating it. Japan's been ahead of the curve on crypto regulation in some ways for a while now, but these comments fit into their ongoing efforts to clarify regulations and investor protections. It shows they're not just reacting anymore. They're recognizing crypto's growing role in investment strategies.
So they want to bring it into the fold responsibly.
Precisely. They're trying to strike that balance. Foster innovation, but ensure financial stability. And when a major economy like Japan does that, it sends a powerful message globally. It tells big funds, big corporations that maybe crypto isn't just the Wild West anymore. Maybe it's becoming a proper, regulated, investable asset class.
That lowers a massive barrier psychologically and practically.
Huge implications for where global capital might flow in the future.
That really does change the conversation, doesn't it? From if crypto gets adopted to how and when, especially for those bigger institutions. Okay, so we have Bitcoin bouncing around due to macro and micro factors, Japan signaling a clearer path. What did all this mean for the other digital assets? The altcoins. The article said most of them traded in a tight range on Monday, mostly just following Bitcoin's subdued moves. Was it just a sort of across-the-board dip, or were there any interesting details among the others?
Yeah, you're right about that general link. Bitcoin's gravity is strong. It tends to pull the whole market with it, up or down.
The tide lifts all boats or sinks them.
Pretty much. But there are always nuances, little things worth noting. Take Ether, for instance, world number 2 crypto. On Monday, yes, it fell 3.7%, down to around $4,577. It mirrored Bitcoin's pullback. But, and this is the important bit, the dip came right after Ether had smashed through to a new all-time high. It hit $4,955 in the previous session.
Wow, nearly $5,000. So even with the dip, that's still significant strength.
Exactly. Shows there's real underlying momentum there, a strong growth story happening even when the broader market takes a hit. That record high is a key data point. Then you had XRP, number 3, down about 2.5% to $2.94. And yeah, the rest of the market felt it too. Solana dropped almost 5%. Cardano lost over 3%. Polygon was down nearly 2%. Even the, let's call them the more speculative corners of the market felt the chill.
The meme tokens.
You got it. Dogecoin dropped 5%, and even that trumpet token retreated 3%. It just shows, whether you're looking at the top projects or the meme coins, everyone's caught in that same current, influenced by Bitcoin and the overall market mood.
Wow, it really highlights how interconnected everything is, from serious Fed policy down to, well, Dogecoin. So let's recap our deep dive today. It seems clear Bitcoin's swings aren't just random noise. They're heavily influenced by big economic signals like hints from the US Fed, but also tangled up with simple market mechanics like profit-taking. At the same time, we're seeing these potentially game-changing regulatory moves, like in Japan, which could really shape crypto's future adoption. And it's clear the altcoin market, while having its moments like Ether's record high, mostly still takes its cues from Bitcoin, reacting to these same big forces. What really strikes me is that web of connections, how just a few words from a central banker can ripple through the entire global crypto scene, affecting everything from Bitcoin down to the meme tokens, and how comments from a finance minister halfway around the world can signal a potentially massive shift in how these digital assets are viewed and used in finance. It really is like watching these complex global dominoes fall in real time.
And that brings up a really important question, I think, for all of us watching this space. Looking ahead, what's ultimately going to drive the long-term value and, maybe more importantly, the stability of cryptocurrencies? Is it going to be this constant back and forth of market speculation, investor sentiment, reacting to every little news bite? Or will it be the growing influence of clear, supportive regulations, like what Japan seems to be actively building?
Regulation versus speculation as the main driver.
Right. Will more governments follow Japan's example, create these defined, maybe even encouraging environments for crypto? And what would that mean for the next chapter of crypto's evolution? Moving from this niche, often speculative thing towards something more integrated, maybe more stable within global finance. Definitely worth keeping a very close eye on how these global forces, policy, regulation, market dynamics continue to shape things. Feels like a really pivotal moment.